Everybody, another day in paradise in beautiful Las Vegas. And what is going on in real estate? Well, for May, we did 140 sales a day, and I'm surprised at that because I thought that it might stay in the 130s, but we're only two less than last year, which is amazing. Just amazing. I love that. Even with the higher prices, we're going to talk about that in just a minute. But 32 days of inventory went down a little bit because of all the closings and maybe some expireds in there, not sure. But we adjusted the median single family homes to 485, and we listed 37 of those yesterday, and 485,000 and under. And that gives us 1,039 homes in the median price range on the market. And that's 31% of the 4,577. So we have 368 available high-rise homes, 470 condos, 3,406 single-family homes, 333 townhomes, for a total of 4,577 homes. Fantastic. We just listed 117 of these yesterday, all categories. We put 94 under contract, and we closed 191, which helped to bring our numbers up for the month. So all in all, not a bad month, really, not a bad month at all, especially agents out there who are doing 2.5% or 3%. You did well. You did well. You did well. And year to date, we've done 18,825, and we're about almost 2,000 under last year, which really, for 5 months, that isn't bad. And last year, as I always say, was a record year. The investors have upped their game a little bit. They're up to 50 homes, which is 39% of the 39% of the year-to-date daily sales. So the investors are still taking a chunk. And I will tell you that the iBuyer platforms are still number 1, 2, and 3 in the overall transactions. So they're still leading the way. And of course, the non-MLS, the flippers out there are still in that as well. So in the first top 4 spots, it's not an agent, it's a group. So anyway, that's it's not changed that much. What has changed is the $1 million homes, the $1 million plus homes. We're selling over 5.5 a day, and that we have about 725 available homes on the market in that price range, which is a whopping 16% of the market. So yeah, the people are listing them, people are selling them, people are buying them. So that's a great thing. So this is kind of going to be a Wednesday statistics day. And I will do the $1 million home of the month video after the show, and I will post it. And it's going to be a daily occurrence. I don't have my consistent timeline down for doing it, but I will probably be doing it before the show. We'll see. We'll see how it all works out. Maybe I'll do it consistently at 10 o'clock after the show, because I just remembered I do get dressed before the show. So anyway, let's see what's going on here, because there's an interesting statistic I want to show you that I want you to know why some things are happening in our market. And if you look here at this chart, the latest housing indicators, you will see that year over year, we have sold 5.61 million units. That's a lot of units. And the median price of those units was $391,000. Now, these are USA statistics. The housing starts in April were 1,724,000. Now, I have heard some experts say that the builders are going to be pulling back, but I don't see that. I really don't see that. And I don't know why they would. Their prices are going to have to go up, but that's nothing new, right? They've been going up for a while. And the new home sales in March were 763,000 new homes were sold in March. These are amazing numbers. And if you look at it, and if we sold, I rounded it to 5,600,000 homes year over year, And if you look at both sides of the commission at 5%, 2.5%, and 2.5%, that's 24,000 commissions. That's 137 billion in commissions. So if you wonder why the iBuyers and all these referral-based companies are after our business, we have the golden egg. I mean, what industry does 137 billion in sales commissions? Now, we know you didn't net that, but all the people that are into marketing, into social, trying to sell you things, this ignites their fire. I can tell you that, because that is just an amazing number, I remember when we did our social media classes, far back as 5 some years ago, this wasn't the number. It was quite less, but it was still big, but it was still less. I think we were around 120 or something like that pre-pandemic, and probably in the 2018 or something like that. Anyway, big number, just so you know. And this comes from NAR, and they got it from the Census Bureau, so we know it's accurate. And some other things that are going on here. Housing snapshot of pending sales for April. Now, NAR is always a month behind. So if you think that, and this just came out yesterday, so to that point, they're a month behind. But however, it always is a good market indicator when they do this, and the way they do it, how they divide the country. And you'll see that the pending home sales in the Midwest was up, and it was up in the Northeast. Now, why is that? Are people leaving those areas? I think so. I think perhaps. And those numbers, we'll see how they play out. The South was down 4.7%. The West was down 4.3%. And the South is a pretty big area because it encompasses Texas. I guess they don't know where to put Texas. I don't know if that's really South. I think they should have like a mid-South maybe. But anyway, because I think it skews the numbers personally. So, and they put Alaska in our numbers, and I don't see where they put Hawaii, but I think that that's probably in the Western numbers. So that's just an interesting statistic that, month over month, we're down about 4%, in the USA. And pending home sales. And that's not a big deal. We just showed you that, we did 140. If you look here, we did 100. Let me hide this one. So if we did 140 sales per day, right? And last year we did just 2 more. I think that we're probably ahead of the national statistics, given that. So, yeah, so much going on here. Existing home sales. The existing home sales fell for the 3rd straight month in April, a seasonally adjusted annual rate of 5.61 million. Sales were down 2.4% from the prior month and 5.9% from 1 year ago. And that's not the case with us. We're not trending with the United States statistics. Our statistics are better. The existing home sales data measures sales and prices of existing single-family homes for the nation overall, and gives breakdown for the West, Midwest, South, and we showed the pending sales. So hopefully they'll come out with the infographic for the existing home sales. They usually do. These figures include condos and co-ops in addition to single-family homes. So existing home sales for May of 2022 will be released on Tuesday, June 21st at 10 a.m. And of course, we know that they are usually a month behind to gather all the data from all the MLSs and the new home builders and things like that. The existing home sales data provided by NAR solely for use as a reference, and no part of this data may be reproduced, stored in retrieval systems, transmitted, or redistributed in any form by any means, electronic, mechanical, photocopying, without NAR's prior written consent for those who are not members. So what that says is, and the reason why I said that is because you're a member. So you can use their graphics, you can use their articles. And I wanted to, let's see. Yeah. I wanted to go back again to the pending. Let's go back again to that one. So it's good that the existing home sales only fell 2.4%. And I think in our market, it wasn't that great. But let's look here at the pending for a second. So it slid for the 6th consecutive month. Okay, pending sales rose in the Midwest. And compared to the prior year, pending sales dropped for the 11th consecutive month with a 9.1% year-over-year drop and a decline in all regions. Okay, I don't see that that's outstanding information, but the pending home sales index, a forward-looking indicator of home sales. So they use this, it's interesting, they use this index to predict what the future home sales are going to be. And pending contracts are telling as they better reflect the timelier impact from higher mortgage rates than do closings, said Lawrence Young. And he's the NAR's chief economist, and I usually hang my hat on what he says. The latest contract signings mark 6 consecutive months of declines and are at the slowest pace in nearly a decade. Now that's something. With mortgage rates rising, Young forecasts existing home sales to wane by 9% in 2022 and price appreciation to moderate to 5% by the year's end. So by the end of the year, if we take all the sales, we're going to see that the increase was only 5% year over year. We'll see for Vegas, right? We'll see. So the escalating mortgage rates have bumped up the cost of purchasing a home by more than 25% from a year ago, while steeper home prices are adding another 15% to that figure. So let's read that again, because there's a lot of meat in this sentence. It says, and he says, Dr. Young, the escalating mortgage rates have bumped up the cost of purchasing a home by more than 25%. That means payment, right? That means payment. I mean, when we go from 2% to 5%, and you do that magic formula he does, it's 25% from a year ago. While steeper home prices are adding another 15% to that figure. Now, if actually, so your price is going up. Okay, I get that, but your payment is going up. So you have to really, he really probably should dissect that. And I think we have in recently, and we can do that again. Because the bottom line is, if I have to buy a $485,000 home at 5%, where was I when I was paying, $425,000 at 3% or 4%. So that's what you have to look at, and that's how that percentage should. I think he should be more defined in how he arrived at those, and I think we should do that for ours, because I don't think ours are that high. But anyway, I digress. In some cases, the higher rates increase mortgage payments by as much as $500 per month. Now, I like that. That's a detail. Young notes that such price hikes are already a burden, but they become even more problematic to a family on a budget contending with rapid inflation, including surging fuel and food costs. So the vast majority of homeowners are enjoying a huge wealth gains from their equity and are not under financial stress with their home as a result of having locked into historically low interest rates. So if you refinanced your home, or your clients did, they have locked in lower interest rates. And so the biggest component of that for me is not just the payment. The payment's number one. Number two, the second biggest component of that is that means that every month you make a mortgage payment, more is going toward the principal and less is going toward the interest payment. So as you climb up in the interest rate, to me, one of them, of course, the payment makes a difference. I get that. It's also deductible. But the biggest negative to that, to me, is that I get less equity built up from my principal. I think that's something to note. So Young explained, however, in this present market, potential homebuyers are challenged and thus must attempt to mitigate the rising cost of ownership by opting, and here's his major punch in in his predictions for a 5-year adjustable rate mortgage by widening their geographic search area to more affordable regions. So they're doing one of two things. They're using an adjustable mortgage, 5-year adjustable, right? And they're also widening their search outside their area, which could be why so many people, when you look at the pending home sales here, why the Midwest and the Northeast has so many pending. Midwest includes Chicago and Michigan, and then the Northeast, of course, that includes New York, and I mean it's very expensive in that corridor. Not Pennsylvania so much, but New York and Connecticut, very expensive to own a home there with the taxes and everything else. And Chicago, of course, we know that there's a pretty big exodus from Chicago and Cook County coming. They go to Florida or they go to California, Nevada, or Arizona. I don't know how many are going to California, actually, because they're jumping out of the frying pan into the fire. So Young goes on to say that if mortgage rates stabilize roughly at the current level of 5.3 and job gains continue, home sales could also stabilize in the coming months. So let's look at something here. Let's hide this. And I want to show you something that I think is very relevant. If you look at Nevada's wage growth today versus 2019, the weekly wage has gone up 9%. The leisure and hospitality industry has gone up 14%. The retail, 14%. Professional and business services have gone up 17%. Their wages. The amount of money that people are making in Nevada has gone up. So yes, the interest rates have gone up. The equity has, it's really gone up. So the negative impact of what's going on, I don't know if it's as severe here. It's not good. I know we've got inflation and our mortgage. We didn't get a 2% mortgage, and now we didn't get it when it was 4. Now it's 5. I get all that, but at the same time, we're making more money across the board in the major industries in Las Vegas. So he says there are scenarios in which the market soon improves for buyers as well. Young cites that more work from home opportunities have allowed would-be buyers to expand their home search. And if mortgage rates stabilize, which they're roughly at 5.3, and the job gains continue, which we see that in Las Vegas, and home sales stabilize in the coming months, and we see that we have more inventory. I was talking to some agents yesterday, and they said, the highest, the listed price, I think it was JT, I was talking to Aaron Tiller's son, and he said, I had it listed for, I don't remember the exact numbers, but relatively I'm correct, 280,000, and we sold it at 273. That hasn't happened in a long time. So I think that there's some indicators out there that say that we're going to have some type of correction here because there's more choices, and people not only are they not going for this price, but they're also not going for over price. Now, some people will. I'm not saying it's going away, but I'm saying there's some indicators saying that is happening in our market. Home prices, in the meantime, appear in no danger of any meaningful decline. There is an ongoing housing shortage, and property-listed homes are still selling swiftly, generally seeing a contract signed within a month. So a house goes on the market, and it's on the market for 30 days or less. And month over month, Young continues to say that the Northeast pending home sales indicator fell 16% to 74.8 in April, a 14% drop from a year ago. In the Midwest, and we went over these figures, rose 6.6% to 100 last month and down in April. So I know that he really hones in on the pending home sales, but I guess he's used this for years and he knows it's a predictable indicator. So the pending home sales is a leading indicator. Here he goes. He's following my question here. For the housing sector, based on pending sales of existing homes. A sale is listed as pending when the contract has been signed but the transaction has not closed. Through this, though the sale is usually finalized with 1 or 2 months of signing. And that's okay. I'll take that. Pending contracts are good early indicators of upcoming sales closings. However, the amount of time between pending contracts and completed sales is not identical. Variations in the length from pending to close can be caused by issues such as buyers' difficulties with obtaining mortgages, home inspections, or appraisal issues. And we know all those things. So I'm not so sure that anything he's saying here is something that we don't know. We'll probably post this on our blog for the consumers, because I think consumers need to know that our market is going to stabilize. He doesn't really think interest rates are going to rise that much, but the buyers have the option to do the adjustable rate mortgage. Now, yes. So once inflation, when you think about that, once inflation is over or comes down for whatever reason, hopefully, right? What goes up comes down. Then perhaps the interest rates will come down, and the adjustable rate is probably not a bad idea, because what drove the interest rate up was inflation. It was a stopgap for inflation. And so when inflation starts to go, when the gas prices, gas prices are a major indicator. When they start going down and inflation stops going down, right, that will affect the adjustable rate mortgages. So they probably won't go up. So it might not be a bad idea for your buyers to look into the adjustable rate mortgage. So I think that is probably the key highlight for today. I did a little video of, where did it go? Here it is. And I'll post this in the group. But this is the Realtors Confidence Index survey. First-time home buyers, you can see that their confidence is down. And let me go back here because I don't think you can see the caption. It's hard to move it. No. Okay. And then the sales to investors, that's hasn't changed. Cash sales went up just a little bit. Distressed sales are way down in April compared to April of last year. That's cool, huh? And then days on the market, that hasn't changed. So the real indicator that has changed is that the first-time home buyers have gone down from April of last year. And so that's like three points on this particular chart, which I don't think is a huge issue. And now that you have the adjustable rate mortgages, if you've had some first-time home buyers that opted out of the market, why don't you look into the adjustable rate mortgages and see if that would work for them. And I think that is it for today. I really like this. I think this is something that we're going to post in the blog, because Nevada wage growth, I mean, that's really something. That's really something. We live in a wonderful place, as you know, and I love it. And if you stop learning, you might as well tell people that you stop selling, because the way the market is, you've got to keep learning. And Jimmy Daig and Kane and I try to keep all of our classes relevant to the market, because we're in it. I'm in it every day, as you know, from a statistical standpoint. Kane is in it talking to his agent formula members, and Jimmy's in it because he's a broker and talking to his agents, as I am a broker talking to my agents. But however, the three of us, I think, together keep our classes relevant and interesting. So if you need contracts, next Monday, we're going to have, do you know all the contract disclosures? Oh my gosh, this is one of my favorite classes, because you think you know all the disclosures, you think you know all the pitfalls, but then you take this class and you're saying, oh my goodness, and it's good to know these things, and it's good to know where to find the answers, and it's good to know where to direct your clients. So this is a terrific class, and it's from 10 to 1 next Monday. Then agency, these are advanced strategies, and Jimmy gets into some negotiating tactics, and this is from 10 to 1 on next Friday. Then we jump down to the following Friday, and we have another contracts class. Now, you need, 6 hours. So we doubled up on our contracts almost as much as we could this year. So this is buyer's brokerage, control the client experience. Now, basically a person becomes a client once he signs the buyer brokerage agreement, and that's according to NAR. They say you have a client once he signs that agreement, and more agents are starting to use it, and especially across the country. We've noticed that, and NAR says that more and more are using it because of the I want to say pending Department of Justice. They're dabbling with not letting the seller pay our commission, and then the buyer has to pay our commission. So it's a good idea to start practicing using that agreement, because you may need to use it so that you get paid. And one of the tips I will tell you is that you can include that in some states right now. They're including that in the buyer's closing costs. So you have to think about that. Talk to your lenders. Be prepared, because eventually it will happen. And why, you say? Well, the Department of Justice says that a seller can't pay somebody who's competing against them. It's against the federal trade regulations, I guess. And so NAR has been fighting that. But if it was passed that the buyer's compensation has to be disclosed. And that's step one to moving toward the seller not paying the buyer's commission. So, but there's always around it. Don't panic. There's always a way around things. And the closing cost, the mortgage companies, I think it's in Texas, are allowing the buyer's commission to be put into closing costs. So it'll all work out. Not to fear, but we need to know how to navigate through the changes. And if you look at the law, the Attorney General is on line one. This is a fantastic class that Jimmy put together. It's a new law class. It's not about old legislation, so it's crispy new. So we just came out with it this year. And then the 23rd, on Thursday, we have the broker management, pay attention or pay. And agents and brokers should take this. It's a great class, things that you need to know. And then we have, do you speak investor? So that's a general class, but it's a great class, especially if we're selling, investors are buying 50 homes a day. So, that's something you need to consider, that you might want to have in your own bailiwick of ways to get more business. If you run across someone who wants to sell their home and an investor wants to buy it, you need to understand this cap rate and cash on cash and the APOD and all the things that go with speaking investor. And then on the last day of the month, we're going to have our risk reduction, which is all about cybersecurity, and it's a required class as well now. And it's a great class. We teach how you can avoid many of the pitfalls in this cyber world we live in. And the hackers are, increasing by the day. Anyway, I love you all. I hope you have a wonderful Wednesday or wine day, whatever you want it to be. And thank you for watching. If you're listening on YouTube, subscribe and put the notification button on so you know when I'm going live. It's between 9 and 9:30, depending on how my mornings go. So I've given myself a little latitude to eliminate some stress in my life. Hopefully you've figured out ways to eliminate stress in your life. We're in a great city. We're in a great market. Stay positive. And you didn't come this far to only come this far. And better days are always ahead. And I believe that. I love you all.